Hi everyone, welcome to Seeing Values. So today we're looking at Contextlogic. This is the parent company of Wish, and they're coming onto the public markets on the 16th of December. They're coming on at a valuation of $14 billion, and the price range per share is looking at about $22 to $24. At least that is what they're raising $1.1 billion at. And this is a shopping app that is doing very, very well. Their aim is to bring affordable shopping and entertaining mobile shopping experience to billions of consumers around the world. It's definitely a good platform. I've used it myself. Their pricing is really competitive, especially compared to what I can buy at a local shop at. So definitely I've bought from them a lot of times, and I've always found it to be a good experience, though I've been trying not to buy too many things lately because you end up buying a lot and it just lies around the place everywhere. You don't really use it, and it just ends up being a bit of a waste of money. So you probably don't want to get caught in a shopaholic type of mentality, though I like the company, so I would invest in the company. So this is a company that does business in over 100 countries around the world. Wish is used by over 100 million active users per month. They have over 500,000 merchants on their platform selling their goods, and they're the most downloaded shopping app so far, which is a really good sign. And their current growth rate is about 32%. So yeah, like if we jump to one part here where I was looking at that kind of has me a bit more optimistic about how they're going about their future. So they write, we also built Wish to empower merchants around the world. Today, most of our merchants are based in China. So that's the thing, like they've got too many merchants in China. So when China has a supply chain issue, which they did, then the company itself does suffer. Though they have looked at trying to broaden the space over time and support the number of merchants on our platform in North America, Europe, and Latin America has grown approximately 234% since 2019. So you can kind of see that they put more emphasis around this area. And the same thing with the United States. The merchant growth has grown 268% since 2019. And that's really good in terms of diversifying that supply chain, where if you rely too much on one country and there's a regulatory issue or there's a supply chain issue, it could hamper the app itself. So as they put through our diversified and global merchant base, we're able to offer greater depth and breadth of categories and products. For example, in 2019, 4 of our top 10 selling merchants on our platform were located in the United States, selling refurbished electronics, beauty products, and hobby items, which illustrates the ongoing diversification of our merchant base. So this kind of company can actually kind of broaden out as they go. In a sense, they can actually broaden out to what Etsy does, which is like handcrafted goods as well. So they don't have to go the whole route of like Amazon or Alibaba. They can kind of broaden their approach, and also broaden their merchants, which will help them continue to expand their sales. Let's dive into the financials. As they put in their financials, so here we go. In 2015, the revenue was $114 million. In 2016, it increased by 3 times nearly at $445 million. And then they went on to more than double that to 1.1 billion in 2017. So you can kind of see this app really, the sales are growing really, really quick. And then they grew that to 1.7 billion in 2018. Growth did slow a bit in 2019. But it's kind of one of those things that you get when you just grow really quick and then you need to just like consolidate your operations. Like remember, each time they grow, they're gonna do extra things. There's a lot more work to be done, and there's a lot more people to manage as well. So it's not one of those things where growing is straightforward. But of course, this year has favored them and they've continued to grow a lot better, because from 2018 to 2019, they only achieved about 10% growth, whereas for the 9 months from 2019 to 2020, they grew about 32% from that 1.3 billion to the 1.7 billion. So hence why, there's a bit more, I guess, in a way. That's why they're probably coming onto the markets, because their growth is back. They want to get a good valuation, though I probably expect their next year valuations, growth rates, to kind of slow down, but probably a bit more, in the sense of probably around 20%. So you probably have to be wary that this year for any online platform, especially shopping, they've done pretty well, because everyone's just at home doing a lot of shopping. So in this sense, the cost of revenue isn't too bad, because out of their 49 months in 2019, they did 1.3 billion, and about 255 million of that was cost related to that. And then the gross profit was over $1 billion, and same with 2020. Though the sales and marketing, this is a company that markets himself very, very heavily, so they could definitely be a platform that can profit if they really wanted to, but then they would really slow down in growth. So this is a company that's focused very much on growth. If you're spending $1 billion on sales and marketing, it shows you're after growth, and you could easily cut that down and begin to focus on profits. But I don't see that as a big problem, because if they can continue to grow sales, and maybe their sales and marketing doesn't have to increase so much more over time, then they could probably start making a profit. As it's put, in the 9 months, they lost 24 million, and it was increased this year to 120 million. For their loss, though they probably wanted to, get themselves more in front of people this year, because everyone's at home, they're doing a lot of shopping, and this is probably the best time to be marketing to everyone, and hence how they're able to boost their growth rate this year. So it's definitely a company that is doing really well, particularly this year. And also, it's one of those apps where the minute you've used it and you build a bit of trust around it, you will continue to use it. And I think they're just going to continue to grow. Probably the growth is probably going to slow down, given how large the operation is, unless they find a new way to increase their revenue. But I don't think there's any signs that they're really broadening the way they sell. They were affected at the start of first quarter. First quarter revenues were down like 6% or something, whereas their second quarter revenues were like around 70%, which was pretty impressive. And in their third quarter revenues, they were up about just over 30%, which averaged for that 9 months to about 32%. So if quarter one wasn't down by 6%, they probably actually would have done better. And quarter one was heavily affected because there was a big supply chain issue in quarter one, because as mentioned before, most of their merchants are in China, and when China has a supply problem, a lot of they can't really sell new products on the app if they can't get them out of China. Hence why they've tried to broaden their merchant base over time, and that should help them a little bit as well. Though you could arguably say, like, any sales they didn't do in quarter one, they probably did in quarter two. Hence why quarter two revenues were growing at about a 70% rate. But in general, like on a normal year, we probably expect them to be closer to 20% growth. So yeah, in terms of their cash position, as of end of September 2020, they had $1.1 billion. And if looking at raising another $1 billion, that would give them about $2 billion. And that shouldn't be too bad for this company, particularly since their loss for the 9 months in 2020 was at 120 million. And the biggest loss for the company was in 2018, when it was at 223 million. So they definitely raised enough cash probably to last them for quite a while, probably at least till they get to profitability, so I wouldn't worry too much about them coming onto the market for any more money. I reckon this is quite a decent and good long-term company. Yeah, I was actually going to show you this here. So this kind of broadens out to show you where their merchants are from. So about 94% of their merchants are from China, 4% from the United States, 0.3% from the UK, 0.2% from Canada, 0.1% from India. So you can kind of see like they could probably broaden their base in terms of their merchants and then start selling more of the local products to local countries as they go. Kind of like if they're doing business in the UK, they could probably increase their merchants more than 0.3%, and those local items might sell even better. So as they continue to broaden out their approach, kind of makes sense that this might be the way to grow, by growing from a local merchant base to sell to locals, and that might be more popular rather than focusing on China and then going through the Wish platform to the customer. And when China has a supply chain issue, then your customer doesn't end up getting their goods on time, which probably puts a bad experience. Because one reason that I don't also like buying on Wish is like whenever I buy an item, it takes forever for it to arrive. Though of course it depends on which country you're based in. But generally, if you have to wait, 1 or 2 weeks for your product, you're not going to be that interested to continue buying from them unless it's for items that are, that you don't need in a hurry, or the item is selling so cheap that you're going to buy it from them. But of course, they have competitors. Like if I'm buying, a screen protector for my iPhone, I could always buy it from AliExpress, or I could buy it off Amazon, or I could buy it off Wish, and the shipping times are all very similar. Pricing is also very similar, so hence why there's probably a better approach if they actually focus more on local merchants, because if you focus on local merchants, the shipping time is quicker, and there's a more diversification in terms of products, and you get to, and in a way it makes you a bit more unique, particularly if you're competing against AliExpress, though it probably puts you in a very similar category as Amazon. But if you can actually diversify into like a home crafted handmade goods type of situation, kind of like what Etsy's done, then I think it also advantages this company as well. So it just depends how they want to grow in the future. But so far they're doing all the right things, so I think I'd trust these guys to continue to grow and just prove what they can do. In terms of valuation, this 14 billion valuation isn't too bad. I think the 14 billion valuation is in a sense it's probably on the lower mid range. I kind of can see this company going up by probably 50% to around that 20 billion valuation, and hence the share price probably about $36 around there in terms of share price. If it's below 36, I'm very happy to buy. If it's above 36, then there's probably not enough upside. Like, you want to buy a company for the upside, and if you buy a company at too high of a price, then you don't really have an upside, and you've got too much of a downside if potentially the company reduces its growth and there's a big sell down on the stock. So kind of like recently how we've seen with C3 AI, share price went above $100, much more than I thought when I was looking to buy at less than $50. But that's one of those things, you either buy at the right price or you just don't buy, because there's always constantly more opportunities coming onto the market, and you're better off picking the right ones rather than being too desperate and investing in the one that you've decided. If I want to invest in Contextlogic because I like using the Wish app, and the valuation goes to, say, the share price goes to like $40, then it's going to make it very hard for me to justify buying it at share price, because the upside might not be that great. So when you buy a stock, it could be a really good company, but you also have to consider how good the upside is. Until then, let me know what your thoughts are. Are you interested in buying into this company? If you've got any comments or questions, post below. Until then, good luck investing, everyone.